When it comes to investments, vehicle selection matters. So you have a mutual fund and you have an exchange traded fund. A lot of people get them confused and think that they're the same type of investment because they're basically baskets of investments, aka like a exchange traded fund, an ETF, and a mutual fund both can own thousands or hundreds of different stocks, and so you're diversifying away from one individual company. But there's a big difference why they aren't equal, and that is because of the tax structure of these two vehicles. So an ETF trades like a stock does because it's basically bundled all together and locked in, whereas mutual funds more open and doesn't trade every day, or trades every day, but only trades once a day, so you can't just buy and sell it on a stock exchange. So those two different structures have some pretty massive impacts. The Chartered Financial Analyst Institute basically did a study and realized that mutual funds actually have a much higher cost than exchange traded funds, or at least mutual funds have a higher cost in general, because you have the expense ratio, you have basically turnover drag, aka buying and selling of different stocks creates drag and costs. You have tax costs built in there, and you have cash costs because every mutual fund has to have a certain amount of cash on hand to be able to fund and liquidate different investments anytime money goes in or out. So those costs really add up. So on a taxable account, which is where you really get hit with taxes, the costs are about 4.17%. So 4.17% is your cost of owning a mutual fund. So if you have a stock mutual fund that's, on average returning 9% per year, well, that cost 4.17 takes you down to a little under 5. A lot of that return is going to be also inflation. So let's say inflation was 2%. Well, now you're down to 3% return. So you can see how these costs really basically eat away your returns. And it's not just the cost of investment management, it's the total cost of just the whole structure. If it's in a tax protected account, the costs are closer to 3.17%, which is still significant. So even if a mutual fund's in a retirement account like a 401k or IRA, those costs still add up over time. So if you're considering the difference between a mutual fund and an ETF, there are some instances where a mutual fund does make more sense depending on what assets you're buying. But that being said, it's more rare than not. So if you're choosing between a mutual fund and an ETF, long story short, an ETF is going to make more sense most of the time.